always seems to, there we go. Sorry about this. The sound always just takes a little bit of time to come on. But hello there and welcome to this week's Look Ahead with me, Fiona Cincotta, Senior Market Analyst at City Index. So just before we start, as always, I'm just going to ask you to read through the risk warning that we have here. I'm going to put myself on mute whilst you take your time to go through that, and then we can kick off. Okay, excellent. Let's crack on. So I think let's just have a start this week by taking a quick look at what we've been watching. If we just have a look at what's going on as far as the US dollar is concerned, we've seen strong gains in the dollar again this week. It's trading up at levels above this level here, which was the 2023 high. So, we're seeing the dollar trading at levels that were last seen in 2022. Now, a couple of things supporting that dollar strength that we've seen across this week. Not only have we got sort of ongoing optimism surrounding Donald Trump, but we've also got the and sort of inflationary policies from him. Interestingly, this week we haven't really seen much as far as US data is concerned. We've got the PMI figures which are due shortly, but this is basically, we've got geopolitical jitters which are unnerving the markets. We've seen that sort of move towards safe haven flows. We've seen that reflected in the US dollar and also in the gold. We've also seen sort of, these expectations on the Trump trade, which have resumed, of sort of inflationary policies. And that has also helped the US dollar move higher. Now, that has had sort of a big impact on currencies, which we will look at as we move through this week's events, including Euro, US dollar, Sterling, US dollar, and US dollar, Japanese yen are some of the ones to mention. But just as far as US stocks are concerned as well, let's just have a quick look. We have actually seen a resumption in the move higher after falling to that weekly low, or sort of 2-week low that we saw at the beginning of the week. So we've seen a resumption in equities, although again, it's hovering, it's getting close to all-time highs, but it's been fairly muted in the sense that we haven't seen sort of those big gains that we saw surrounding the Trump victory. Obviously, big news this week was Nvidia's earnings, which beat expectations as far as earnings and revenue were concerned. However, the forecast for revenue growth was a little bit disappointing, but it doesn't really matter. This is still a stock that's seen excessive growth this year. We've seen up 200% this year. Trading, it did reach an all-time high there of 152, just trading below that all-time high as we speak, in that range that it's sort of been trading in since the beginning of the month. So that's what's going on there. Just let's take a look now when we're moving to the economic calendar. As far as what we're looking at in the US, we've got FOMC minutes and we've also got core PCE. They're going to be, core PCE is expected to be the main focus for the week. As far as, we'll just start with the FOMC minutes. These are the minutes to the November FOMC meeting. Now, this is the meeting where the Federal Reserve cut interest rates by 25 basis points, and that was marking the second straight rate cut. Now, the market will obviously scrutinize the minute for clues over the outlook of the future path for interest rates, but it's worth noting that this meeting happened before the US election, which means they could be considered, potentially to be quite stale, given the different expectations which are now facing the Fed in the coming year compared to if Trump hadn't won. The other thing to point out is since the data, since the meeting, sorry, we've also seen inflation has come in hotter than expected, which sent Treasury yields higher, and inflationary policies obviously are expected now under Trump. So, I mean, I think for those reasons, the Fed minutes will be considered a little bit stale. I think if there are sort of concerns, obviously recent Fed speakers have sounded a little bit less dovish, and they've been alluding to sort of a slower path of interest rate cuts due to the sticky inflation, due to solid economic data. So I think if we get a hint of that in these minutes, that actually policymakers are starting to think the data's looking relatively strong, and maybe they will need to, you know, hold off on, or at least rein in their plans for rate cuts, then that could see US stocks come under pressure. We could see the US dollar rise, and obviously gold as well could come under pressure. But the other one, so this is the NASDAQ that we're looking at here. It's again a similar move to the S&P. We're just sort of grinding that a little bit higher after hitting those lows earlier in the week. Long lower, if you can see those long lower wicks on the candles suggest that there was little selling demand at those lower levels. So that tends to be sort of suggestive of that move higher. We've got the RSI, which is over 50. So technically speaking, it does mean that momentum is on the bull side. So I think the next level is that 20,750. That was the all-time high from July, back in July, the high. Buyers will look to rise above that in order to get towards that 21,230 level, the all-time high. But the other thing that we're going to be watching is, as I mentioned, core PCE. This is the Fed's preferred gauge for inflation. If we just have a look here, core PCE is due out on the Wednesday. I'm just going to bring up the gold chart as we talk about core PCE. Okay, so core PCE, Fed's preferred gauge for inflation, will likely be the main focus next week. It's expected to rise potentially to 2.8%, up from 2.7% in September. And on a monthly basis, we could see it even get up to 0.3%, up from 0.2%, in line with the rise that we saw in CPI and inflation. Now, the difference between the way these two inflation levels are, data are compiled, means that large gains in shelter prices are actually a smaller factor in the core PCE data. But that's being offset with a surge in portfolio management costs, which obviously rise as the stock market rises. And given that we've got the stock market just around all-time highs, that means that those charges or costs are also going to be high. Now, I think the concern here is sticky inflation, along with, you know, this solid US economy. We saw US jobless claims yesterday were also much better than expected. So, you know, strength in the labor market remains. And I think if we do see sticky inflation, then that's going to support further the Federal Reserve adopting a more hawkish stance towards cutting interest rates, particularly knowing that they've got Trump administration coming in, which is expected to bring with it inflationary measures. So hotter than expected core PCE could actually dampen market rate cut expectations, which would be bad news for gold. Gold obviously trades inversely to the US dollar. So that could see the US dollar push higher, could hurt gold's outlook. This is gold. The other thing that we need to keep in mind with gold is what's going on in Russia. Obviously, we've got the Russia-Ukraine war has really ramped up over this week. We've had Putin, Russian president, warn of or lower the threshold for a nuclear attack. We've seen Ukraine now use both British and US missiles, firing them deep into Russian territory. Russia has obviously said that they consider this to be sort of almost a direct attack from the owners of that weaponry. So we're seeing this ramping up, which has driven safe haven demand for gold. So even though we've seen the US dollar rise again, we're seeing gold actually rise as well. Okay, so and that's highlighting those safe haven flows. So another key theme to be watching out for next week, as well as the data, is also to be watching out for the any developments as far as Russia is concerned. So that's the other thing. As far as this chart is concerned, we've seen it recover from the 100 SMA. That was down at 2,550, and it's risen above that rising trend line, which dates back to the beginning of this year. It's also risen above the 50 SMA, and we're seeing it just rising above this level here, which is also the 2685 level, which was the high that we saw back in September. So as momentum is on the side of the bulls here, next level to be watching out for 2700 round number. 2750 is the levels that we saw here at the beginning of November. That's ahead of that all-time high of 2790 in October. So it'll be watching out here. Will safe haven flows be enough to drive gold prices higher, even though we might potentially see a stronger US dollar? That's what we're going to be watching out for, the dynamic, particularly with that inflation data due. Just on the downside support, as I said, 2685. Below that, you've got the 50 SMA at 2660, and then below that, you've got the 2600. Which is the low level that we saw back in October. So just whilst we're talking actually about risk from the war ramping up in the Middle East, we've seen this actually it's been interesting, because although it hasn't really been necessarily reflected in equity markets, which have pushed higher, it has been reflected in the FX markets and also commodity markets, as I said, in the gold, and also now in oil. So again, this is something we'll be watching out for next week, is any rhetoric surrounding sort of a ramping up of that the war in between Ukraine and Russia further. Now obviously we haven't actually seen oil exports hurt from Russia in the war. The concern here is that Ukraine could target oil infrastructure, energy infrastructure in Russia, which would send the price sharply higher of oil. Also, there are concerns about how might Russia actually respond to such an attack from Ukraine. So this is what we'll be watching for next week. We've got the price here. It's recovered again. You know, we've been talking about it so much, 67.50, 67, this level around here. We've seen a recovery from that price earlier this week. We're seeing the price move towards that 71.50, 72 level, which is again a level we've spoken about a lot. We're just coming up to the 50 SMA, so that at the moment is proving to be the next next hurdle for oil prices at around the 70-60 level. But if we can get above this 72.50, that's when we create a higher high, and that could bring in this falling trend line dating back to the middle of the year. So that's what's going on. Other things, talking about US inflation. Now, I guess this is all intertwined actually. Let's bring up Euro US dollar, because Euro US dollar has been, well, I mean, it's had an absolutely terrible week. You know, look at this. We're trading down at levels that we last saw in, I mean, that was the 2023 low, wasn't it? So, you know, we're looking at 2022 levels here. And suddenly, you know what, we've talked about this as well before, but you know, the idea of parity between Euro US dollar doesn't seem so crazy as it did perhaps, you know, just even at the end of September when we were trading up at 112. So this is a really steep run that we've seen in the euros. It's got a lot of factors against it. Obviously, it's in the firing line as far as a ramping up of tensions between Russia and Ukraine is concerned. It's in the firing line as far as Trump's policies are concerned, if they're inflationary, if they're trade tariffs, if there is tariffs also on China. These are all things that are against, because obviously China is a huge trading partner of Germany. And also, let's not forget, we saw PMI data today from Europe, which is really sounding the warning bells as well. We saw that's what sparked as well this deep sell-off that we had today. PMI figures in Europe are the composite PMI, which is a good gauge for business activity, is down at a 10-month low. It's in contraction territory. We've seen services tumble, we've seen manufacturing contract. So, I mean, this is a weak outlook that we're looking for. Next week, we've also got inflation data from the Eurozone region that will be coming through on, there we go, on the Friday. So as far as inflation concerned in the Eurozone, it did actually just tick higher. We had the confirmation print this week for the Eurozone inflation. It reached 2% annually in October, up from 1.7% in September, and that is the Eurozone, the ECB's 2% target level. We saw, if we sort of delve deeper into that data, the service sector was the main driver of price increases, and that was at 3.9%, which is probably down to wage growth or negotiated wages, which we saw actually did rise sharply in Q3. But as I said, that more timely PMI data is more concerning. I think, you know, there is a potential for inflation to be cooling, particularly as growth sort of stalls and contracts. And I think at the moment the market is expecting a 25 basis point rate cut from the ECB, but actually that could easily be ramping up to 50 basis points. As far as what this chart is telling us, we are in overbought territory. We've got that long lower wick on the chart there, so it does suggest that the prices, selling pressures at that lower level were actually quite weak. That was down at a low, it was at 103.30. Look at that, almost parity. I mean, there's a lot of work to be done here for the euro to even sort of, you know, neutralize this sell-off. At the moment, we're trading around here around the around the 104 level. That's right. So next level on the upside is going to be, you've got the 105 level here. This 104.60, that was the low from, where's this? Just bear with me. Is that 104.50? That's 104.50. So that's just a psychological level that we've got in there. And then you've got the 105 level. So, you know, we're not looking at any sort of sense of steadying this sell-off unless we get above the 105 level. That could negate sort of that near-term sell-off. We'd need to be rising above 106 in order to be getting a higher high. But you know what? We're still a good distance below the 200 SMA, which is at 108.60. So, you know, this is looking bearish. The question is, you know, how much lower has this got to go? How much weaker are we seeing the Eurozone outlook compared to the US? That's what we're sort of seeing playing out here, and the potential dangers to the Eurozone economy compared to the US. Just going to bring in the DAX whilst we're talking about Europe, just to take a quick look at what's going on there. Obviously, we've seen it's holding up not so badly given the risks that it faces. And that's sort of, obviously, we're finding some support there, I think, on optimism that the ECB might be cutting interest rates at a faster pace. But we're pretty much trading, I would say, caught between the 19,500 and the 19,000 levels. Just trying to push above that 50 SMA around the 19,200 level. But yeah, you know, we've been trading in this pretty familiar range across the month so far. There have obviously been some spikes lower, but nothing too meaningful, no closes below that 19,000 level. So I think that's what we'd be looking for on the downside, is a close below 19,000 in order to take out the 18,800 spike lowers that we saw here and the 100 SMA. But we're seeing the RSI is pretty neutral. So on the upside, looking for a rise above 19,500. I think that's potentially more challenging given the fundamental backdrop to the Eurozone. Okay, so let's just have a look what else we've got going on here. Just bear with me. So Tokyo inflation as well. Let's have a quick look at USD JPY. Okay, so Tokyo inflation is expected actually to rise above the Bank of Japan's 2% target, owing to the reduction in fuel subsidies and increases in food costs. Core CPI, which is considered a good lead indicator for the nationwide price trend, is expected to rise over to 2.1% annually, up from 1.8% in October, when it was below the central bank's 2% target for the first time in 5 months. Now, the data comes after we had Japan's nationwide CPI data come through today, which actually cooled slightly to 2.3%, down from 2.4% in September. And all this data comes ahead of the Bank of Japan's monetary policy meeting in December, where actually Bank of England Governor Ueda said that, basically hinted towards the central bank considering rising interest rates again in December. The markets have been a little bit unsure whether the Bank of Japan was still considering another rate hike. So yeah, it was reiterated in a speech overnight yesterday, in fact, that it was very much a live meeting, the one in December. So this is USD Japanese yen. Obviously, we're seeing it trade in a very neat rising channel. It's above the 200 SMA. We've got the 50 crossing above the 200. We've got the RSI, which is actually saying sort of bullish momentum, but declining bullish momentum. And we're sort of seeing that by this sort of stalling around this level here that we're seeing. So on the downside, we've got the 153.30 level, which is the 61.8% fib level of the 162 high, 139.5 low. And then on the upside, we've got 155 round figure. Then on the upside, you've got here the 157.10 level. So this is what we're just sort of hovering around these levels. Obviously, the bullish trend is very much intact. Would need to see a rise above the high that we saw here, the 156.75, to create a higher high. Take out next the 157.10. Look towards 160 round number. On the downside, support here is at the 153.40, as mentioned, and below here, a break below here exposes the 200 SMA. If we get a move below the 200 SMA, then we could see bulls. That's at the 152 level. We could see sellers take more control and look towards the 150 on the downside. So let's see, what else have we got going on? We've got the RBNZ. Interest rate decision. Now, oh, what's going on there? There we go. So the RBNZ is expected to announce their interest rate decision on Wednesday. We're expecting a 50 basis point cut. That comes after a 50 basis point cut last month. And basically, this comes as New Zealand's economic activity is showing little sign of recovery despite these large jumbo cuts that we've seen. Recent sort of sentiment surveys show that the show still, very much recession is a problem, and highlights the need for less restrictive monetary policy. So, I mean, inflation expectations remain caught between that 1% and the 3% target range, providing further incentive for the RBNZ to cut rates. And yeah, so I mean, the big question here, the market's pricing in an 80% probability of a 50 basis point cut and a 20% probability of a 75 basis point cut. Obviously, I mean, a big jumbo cut at 75 could spark concerns over the health of the economy. Even a 50 basis point, a second straight 50 basis point cut could do the same. But I think given the risks involved for the economy by not doing it, that far outweighs the concerns of over market perception. So just as far as levels are concerned, look, currently testing this level here. It's been a level which has you know, stemmed gains, stemmed losses on several occasions across 2024. Below here we've got the 2023 low coming into focus, and that would be at 57.73. So we're not that far away. That would be the next level if we get a breakthrough. We're not in overbought territory, so technically there is some more room for a sell-off. On the outside, immediate levels there at 159.20. That's the weekly high. Could we get past that? That'll bring the 160 level, just over 160, into focus, which is the September high. Just very, very quickly, I'm going to bring up the Hang Seng. There hasn't been a huge amount of data as far as China is concerned, and we don't really have much Chinese data next week. There is just the PMIs, but that's following weekend, so that will appear in next week's edition. Just worth watching out here though, because I think there are a couple of levels to be watching. We've taken out this level here. You know, we have been consolidating last week. Consolidation, we seem to get this aggressive sell-off as it heads now towards the 100 SMA at 18,810. Below there, then we've got that level here of 18,500, which is the level we saw back as the high in June. And then below there, we've got the 200 SMA. So just keep an eye on those levels. As far as the China 50 is concerned, that testing this level here, this is a really aggressive sell-off that we've seen. We're back at this level here at 13,000, which we saw back in October. It's also the high that we saw back in May. If we get a break below there, the next one I'll be watching out for will be the 200 SMA around the 12,400 mark. So that is all we've got time for this week. It always goes so quickly. But listen, thank you so much for joining, and I look forward to seeing you next week.